Years ago, I watched my mother lose her job after developing carpal tunnel from years of repetitive data entry work. She had surgery and took time off to recover, and when she returned to her job, she was later let go. That moment really stayed with me. It made me question why businesses still rely on manual processes, especially when technology should be reducing friction, not creating it. That experience eventually led me to build Connex, a platform designed to automate e-commerce accounting and eliminate headaches that come from disconnected systems. And payments are one of the biggest sources of friction for growing businesses. Today's guests understand that deeply. Mary Miller is the marketing director, and Sam Johnson is a partner success manager at Paytrace, a payment technology platform trusted by e-commerce and B2B businesses to process payments securely, reduce costs, and integrate cleanly with accounting systems. And as we look ahead to 2026, payment strategy is no longer about getting paid. It's about margin, security, customer experience, and how payment data flows into systems like QuickBooks and ERPs. Mary is here to help us unpack what smart businesses should be thinking about now. Mary, can you start by sharing your background and how'd you get started at Paytrace? And same with you, Sam.
Thanks for having us, Joe. When I think back about when I got started, it was in the early 90s and I worked for a CPA firm. And shortly thereafter, I became an ERP AP manager. So I was literally an end user. I faced all of the challenges that you just described about manual processes. And back then we didn't have a lot of automation built into our solutions and our systems. And so over the years, as I got more involved in the channel, I've worked in the Microsoft space now for a number of years. Paytrace after leaving the AP side for almost 10 years and came over to the AR side, specifically through the Microsoft Dynamics ERP ecosystem, but also connected to e-commerce platforms and other ERP systems and accounting systems that have come about over the last several years. And I really just want to go back to, I continually go back to that initial experience that I had as a user. I want to help people solve those problems. I want to help them automate. I want to help them get rid of the manual paper and processes, much like your mother's scenario where they were dealing with outdated technology. So at Paytrace, that's what we're here to do, is help people automate their invoice process, automate their collections, and really just make it easier for them to get paid. Sam?
Yeah, thanks, Mary, and thanks for having us, Joe. My background it didn't start in payments, much like Mary. It started actually in sports. I went to school, got a sports business degree, and I actually worked for a hockey team, basketball team, and an arena football team in sales. And what ended up driving me over into the payment space, because why would you leave sports, is when I did sales, I found there were so many inefficiencies with the payments process. We were a small front office staff, and anytime I made a sale, I'd have to run back to our back office. I'd go to the credit card terminal. I'd have to key in a number, go back to the phone, let them know that the transaction it was very much a headache. It was a pain. And that's how I was introduced to Paytrace. Is we actually upgraded our tech stack to the company I work for now, to Paytrace. And it was a game changer for me. I could actually focus my time on actual sales and the stuff they hired me to do instead of just manual data entry, task-driven functions, much like you said your mother dealt with, Joe. So that drove me over to Paytrace, and I've been here for just about 10 years now.
Yeah, data entry really slows you down, and instead of focusing on making a sale, you're focused on processing a sale, getting paid, signing a contract, and it takes you away from prospecting potential customers, takes you away from attention to current customers, anything you can do to automate it. You mentioned your employer went to Paytrace. Are they using the Trace AR, the AR automation solution, or just the payment processor?
This was way back in the day before Trace AR was even conceptualized. This was when Paytrace was still primarily just a gateway. The technology was still great back then, but now that sports team is no longer in business, but they definitely would have benefited from the Trace AR solution.
So speaking of payment processing, Sam, as you know, payment processing fees can quietly eat into margins. What are some of the most effective ways e-commerce businesses can reduce processing costs without hurting customer experience?
Yeah, great question, Joe. One of the biggest objections I hear from clients about credit card processing is just the high cost of acceptance. You have to pay money to get paid. which is kind of backwards thinking to a lot of folks. And in some cases, if you're not working with kind of a trusted partner or even an expert that understands your business, you may be paying a lot more than really what you optimally should. So a couple ways that we can take a look at some of those processing costs. I'll give you two different examples. Number one is looking at different fee programs. How can you pass that card acceptance cost off to somebody else, right? To the consumer directly, right? We see it all the time now. I feel like it's getting much more prevalent where you go to a business, you pay by card, and they say, hey, you have to pay a 3% fee. That's what's called a surcharge.
Some companies won't even take credit cards, like local restaurants. Some will just, like my local diner will only take cash. Even some of the contractors I work with will only take cash or check. You can't pay by credit card.
Exactly. And right, the reason why they do that is because they don't want to pay whatever that 3-4% fee is, because they might be operating on very tight margins as it is. But on the flip side, they're probably losing a lot of business because of that. I've gone to places and said, I'm not going to do business here because I can't pay by card. I don't have another form of payment.
Yeah, when there's friction with the payment process, I learned that in 2024 when we had really limited sales because it was hard to buy our software. We had one customer, we had to call them 7 times to process an order. And I spent a lot of time and a good amount of money to fix that. And now we have people buying. I think our sales are, 3 or 4x just because we improved the payment processing experience.
Exactly. So when you can provide that payment experience with the consumer, that makes that, 3% cost to them, makes it a little bit more palatable. So that's one option. There's surcharging. There's other things that, a business can do, like a cash discount or a dual price where they offer a cash price versus a card price, right? Different ways to mitigate that. The other way that we see a lot more impact with our businesses is what we call interchange optimization. I won't get too far into the rabbit hole on this because there's a lot of technical things, payment terms with this, but essentially what it is that cost that a business pays when they accept a card isn't a set in stone cost. There are different qualification levels that they can achieve by doing different things on that transaction, right? Usually it includes providing additional data. And that's something that we really try to make more efficient, right? We don't want more data entry. We want to be able to provide tools that automate data entry so that our merchant can qualify for much lower cost. In some cases, 50 to 100 basis points up to a full percent and reduced fees on their payment processing.
Yeah, it's very important to save money on the fees, and they can add up, especially when it's 2 or 3%. Mm-hmm. Mary, checkout friction is one of the biggest causes of cart abandonment. If people can't buy your product, they'll go somewhere else they can. What does a truly frictionless checkout experience look like in 2026?
Yeah, I think what we're seeing is that business buyers, because they're doing so much research before they make a purchase and want to be able to make as much of a purchase or commitment online, they want the same type of experience as we get as consumers, right? Put the item in my cart, check out. If I want to pay by credit card and I need to send it, let's say, to somebody else, an admin, an AP staff person, send them the link, click the link, make the payment. Or if I have a corporate card, a business card, like Sam just described, that might qualify for a better interchange rate. If I have access to one of those, I might pay directly when I make that purchase. Because the more we work remotely, we expect customer experience to be, again, just like we are as consumers, right? Because we've become so disconnected in the way that we work, the way that we function, everything is expected to be online. Everything is expected to be at our fingertips. So what we're really talking about is convenience and user experience. So when you talk about frictionless, it's reduce the number of clicks, reduce the number of steps, and reduce the time. Because if it's easier for me to buy from you, I'm more likely to come back. Just like Sam mentioned, he won't go to some places that don't accept credit cards. And Joe, you mentioned that there's some places that you go that don't accept credit cards. And so you've had to adapt to that. So in either case, you're making a decision about convenience. How important is this to me? And as a business buyer, just like we all want to get back to our day jobs and be more and more efficient, every step that we can reduce in that process is time saved and is money saved. So we want to create as much of a consumer-like experience in the business world. Even if that means sending an invoice with a click, that's going to be one less step that somebody has to deal with compared to sending an invoice in the mail, waiting for somebody to approve it, waiting for that payment. All of those things reduce reduce the customer experience for me as a buyer. And of course, that business is then going to have a significant delay in receiving that cash. So faster to purchase, faster to payment is going to be a win-win on both sides.
The more manual steps you add to a process, especially when people need to perform them, is human error.
Right. Absolutely. And the cost of human error adds up too. People don't really track it. There's no line item in a budget for, data entry or errors or the time that it takes to correct those errors. But that's also a factor where every time a mistake is made, now you're adding additional time to either month-end close where somebody has to go back and do research or do manual follow-up to find out what happened with a specific payment. Was it incorrectly applied? Was it not sent to the right person? All of those things are definitely a factor as well, Joe, for sure.
And Sam, changing gears here, fraud's evolving fast. What fraud prevention tactics should e-commerce businesses prioritize now to stay ahead through 2026 and beyond?
Yeah, when I think of the payment space and when you talk about data security, I think it only falls short of maybe, HIPAA as far as kind of the rules and regulations about what you can and can't do and what you should and shouldn't do. And that's why we have, PCI, payment card industry compliance. They have a lot of rules and regulations about how to best manage that. So making sure that, as a business that you are following those guidelines and those compliance rules is really important to reduce the impact of potential fraud out there. When I think of different ways that, scammers, fraudsters are going at businesses right now, one of the easiest things that a business can do is tokenize every single payment method that you have, card especially, right? If you're tokenizing everything, whoever is going to be able to get into that is not going to be able to have access to that information. That's the easiest way you can protect your customers and your company from any sort of liability. And most solutions have some sort of payment data encryption, tokenization, things like that. So don't try to do it on your own. I've done businesses that have tried to do that, and it's not a very good best practice. It's not even a worst practice. Don't even consider a practice.
Yeah, it's very important to keep things definitely secure with the tokenization.
For sure.
Mary, reconciliation is a pain point here about constantly. In my company, we created software to automate the reconciliation process. How can businesses eliminate reconciliation headaches by integrating payment data cleanly with QuickBooks, ERPs, and other accounting systems?
Yeah, it is definitely a pain point, especially at, month end, quarter end, year end for sure. And so when you have an embedded payment solution, I'll give you an example. We just worked with a company who was dealing with initially 5 different business applications that affected their finances. They consolidated everything into an ERP system. They happened to choose Microsoft Dynamics Business Central, but this process would be the same for anyone. And so now instead of gathering data and reports and batches of payments and other related data that supported those payments from 5 different systems, they now get them from one. And because they're using embedded payments with Paytrace, they do have Trace AR for Business Central implemented in their environment. So they are automating their invoices and automating their reconciliation. What they can do is go at the end of the month and download their batches. We import them directly from their bank. We look at all of the payment batches that we've processed through Paytrace. And most of the time, those things are going to match 1-to-1. If there is an exception, typically things for like bank fees or other things that are related specifically to the transactions, we're going to be able to then process that and send it to a separate GL account so that they know they can research it if they need to, if it is something, let's say other than bank fees. So for clients that are looking to reconcile batches from multiple payment sources or banks, again, the manual way is you download it, you compare it, you probably run a query in, a spreadsheet tool and try to make sure that everything matches, look for any discrepancies, send those off to research that might be, something that doesn't match. But when you have an embedded solution, again, it takes all of those steps and that risk for manual error, data to get lost, something to not get converted correctly, not put in the right format. All of those things take manual time and effort as well. So having a reconciliation service built into the application, and in this case, our reconciliation service is built right into Business Central as part of our Trace AR solution. They literally click a button, look at those 2 batches, match them up, see if there's any discrepancy, process them to the correct GL accounts, and they're done. It takes a matter of minutes instead of hours or days, or in some cases weeks at the end of a quarter or month to look through all of that data. Accelerating that process, again, giving people confidence in the data that they're working with is really going to build their loyalty and want to continue to advance their automation in their payment processes as well. Sam, I'd love your thoughts if there's anything you'd like to add specifically about QuickBooks or other systems.
No, I think you kind of nailed it on the head as far as reconciliation goes. That can be one of the biggest, I think, manual pain points that a lot of people can run into. And the tools that we've developed in very recent months, to be honest, Mary, within our Trace AR solution has made that so much simpler. Just being able to plug in a number, hit refresh, and then see, yes, my deposits match up to what I've processed, I'm good to go. Or, hey, there's some type of error. Let's do a little bit of research. And then we can go ahead and try to track that down rather than, like Joe said earlier, risking human error and not having those checks and balances.
Yeah, it's very important to reconcile your books. Here at Connex, we have a deposit matching tool where we'll pull out a payout from a processor and then go into QuickBooks and say, do these sales exist? And if so, checks them off and then adds on the fees. So we also have an automated tool with our product. Another question for you, Mary. From your perspective, what are the biggest trends shaping B2B e-commerce payments right now, especially around ACH adoption and embedded finance? You just mentioned dynamics.
Yeah, I think embedded finance is really the key there, Joe. The conversation that I have with users and partners and, folks like yourselves is that people want to work in as few of systems as possible. Make it easy for me. Make my day job be the system that I live and breathe in, whether that's an ERP system or an e-commerce system. At the end of the day, the system of record has to have the most accurate payment data to reduce those elements of friction, to save time in reconciliation, to not have to worry about collections manager. The last thing you want is your AR team that's probably made up of 2 or 3 people to be on the phone more than your sales team, right? That's not an effective use of anybody's time. So the AR team dealing with collections, we have to take that out of the equation to the extent that we're able. So from an e-commerce perspective, you want as much of that solution embedded right within the system itself. So again, from the moment you click buy, is that experience giving you the consumer, the business consumer in most cases in our situation, the ability to buy, but then does that payment data come back into the e-commerce platform and then also flow through to the ERP system, which is most likely the system of record? We were talking with another customer actually just a couple of weeks ago, and they said, yeah, we can make the purchase on the e-commerce side and we can get the data, but then we have to do and then we have to import that into our ERP system. And God forbid something doesn't, again, format right, line up right. Now we've got to go look into that data and do a bunch of research. So making those systems talk to each other so that it's a seamless experience. It's all about that one system kind of message that's going to make it easy for the buyer, but then most importantly, easy for that most likely small accounting team that's really trying to collect all of these payments and work with all of this data. So we want to make it simple for them so that everything flows through accurately to their system of record and that embedded experience within their ERP system. So one system is what it's all about.
I agree. Here at Connex, we believe in a single source of truth. Our goal is to ultimately sync all the data to some sort of master system so companies can generate those reports. So question for Sam, many online sellers struggle with disconnected systems, payment gateways, accounting software, ERP, CRMs. I know I've been in that business for 15 years, connecting them together. What advice do you have for integrating a tech stack that actually works together?
That's a great question. And I think back at the time, I used to be on client support for Paytrace when I first started off here. And one thing I learned right away, this was back when we were really just a gateway and we relied on a lot of other partners, processors, networks, things like that, is that there is a lot of finger pointing. There's very little accountability. There's a lot of finger pointing. And I think that hinders a lot of trust with our clients, with our customers, when nobody's taking accountability. That can create a lot of frustration and a lot of just jumping through different hoops to ultimately get to a resolution that could have been taken care of right away. That, when I think about Paytrace and the evolution over the last few years that we've had is we're trying to create that full tech stack environment, right? We're still going to rely on some really great partners like Connex in a lot of cases. But as far as the payment experience goes, we want all of that in-house, from the gateway, from the processing, from the actual networks, talking to the card brands, talking to the ACH providers. Our president, maybe not the most eloquent way, but he says we're one throat to choke. Right? If there is a question, if there's an issue, if there is any sort of disruption, which we don't want there to be and we don't expect there to be, a lot. But if it happens, you know who to get a hold of. We're creating all the cogs in the wheel to work together rather than trying to fit different pieces that may or may not work together and trying to get a little bit, we'll say, creative in making sure an integration flows correctly.
Here at Connex, we try to be one integration to end all integrations. We have multiple selling channels and accounting systems. We connect. Many companies have, 4 or 5 different connections through a product. Other companies, like, they have connectors out of the box, but they only work like one way, or they only connect one system. So if you have Amazon and a ShipStation and a Shopify, you don't want to have 3 different companies if there's a problem, especially when you're trying to create some sort of workflow, and that's where we come in. Sam, another question. Visa CEDP is becoming more relevant for online sellers. Can you explain what it is and why e-commerce businesses should be paying attention?
Yeah, CEDP is my favorite 4-letter word for 2025 and really going into 2026. For the listeners that aren't aware, Visa CEDP it's a program that Visa rolled out this year. It really took effect in October of 25, where any business that's accepting Visa business cards may have disruption to their interchange fees. What Visa's doing is they're leveraging AI technology to scrub all of the level 3 data that's being submitted through their networks and making sure that it is valid and not just automated kind of junk data. So really what's happening with that is merchants that may have been using level 3, kind of these automated, auto-filled, generated solutions prior to CEDP may not be getting the same rates that they would expect to be getting. So, what I'm telling people is to look at your credit card statements from October, November, and really compare those to what they were previously earlier within the year. Because if you're not being on top of CEDP and you're not being proactive, you may be paying much higher fees. With Paytrace, what we've done is we've actually developed some new tools called our custom product lists, which enables businesses to enter in all of the different products and services that they sell. And rather than manually submitting that data on every single individual transaction, we have this essentially algorithm that's taking the correct goods and services and applying them based on the transaction cost. So, merchants are not having to go through a lot of manual processes, and Visa is still getting real, relevant, accurate data to ensure that, it's not just kind of that dummy data that I was alluding to earlier. So that's what I'd recommend is take a look at those statements, because it can have a huge financial impact for businesses that aren't on top of that.
And Mary and Sam, our last question for today: for business owners preparing for 2026 who feel overwhelmed by payments, fraud, and integrations, what's the single most important and first step you'd recommend that they take?
Yeah, as I think about this, I think back to my days in the accounting process, living and breathing that. And I would say, look at your process. Look at the process from the buyer experience. What is the step that they take? What's the first step they take? And then what is the rest of that experience? And then what's your back end process that mirrors that? So a little bit of process assessment, so that your goal from that would be automation. Automate. I can't speak to that enough. And we're seeing CFOs, across our customer base and our partner base really turn to that for acceleration of their business, in some cases competitive advantage, because if you can get there faster than somebody else, now you're putting yourself, your business, and your customers in a better position to get cash more quickly, be able to make better financial decisions about your future, and really kind of understand what your cash flow picture looks like. Assess your process with the goal of automation wherever possible would be my recommendation. And there's tons of data, and happy to share more about that if people have questions and want to learn more.
Man, I wish I jumped on this one first, Mary, because we have very similar responses. I guess what I would add to that is, look internally on your workflows, on those processes, but also look within your customer base. I think one of the most important things that we want to be, thoughtful of is how our customers' experience is. We talked earlier about trying to make it as frictionless as possible with kind of the online checkout, the e-commerce, but really within all payments, how can we make that as frictionless as possible for our customers? How can we meet them where they are? Because payments isn't cut and dry. It's not just a commodity. There's so many different ways that our customers want to pay us. And if we can meet them where they are, whether that's card, whether that's ACH, whether that, I hope that they're not sending in physical checks, but if they want to, let's figure out a process that we can make that work. or try to guide them to something else. But really, definitely pay attention to that customer experience, because that's been a big thing with these embedded payments. Is if you're falling behind that, your competitors are going to come in and swoop in and make that buying process a lot simpler for your customers.
Yeah, making the buying process is simple. Sometimes I won't buy something if they don't have Apple Pay, because Apple Pay is like you click the button, I double click my phone and it's done. I'm like, oh, I have to enter my credit card and my name in again. It's just so 1990s. So I agree with your assessment. Mary and Sam, I want to thank you so much for joining us today and sharing such practical insights on payments, fraud prevention, and system integration. For e-commerce businesses looking to protect margins, reduce risk, and simplify operations, this conversation couldn't be more timely. If you want to learn more about Paytrace and how they support secure integrated payment processing, be sure to check out paytrace.net. And if you're ready to eliminate manual reconciliation and automate your e-commerce accounting, visit connexecommerce.com. That's exactly what we built Connex to do. Don't forget to subscribe, leave a review, and share this episode with another business owner who wants to start in 2026 with smarter payments and cleaner systems. Thanks, everyone.
Thanks.
Thanks, Joe.